It starts with a swipe or two, but a small problem can soon snowball into an overwhelming burden. And of course, you know what we're talking about, credit card debt. With millions facing financial strain, Americans collectively owe a staggering $1.1 trillion in credit card debt. And that's a 40% jump in just 2 years.
It's a huge jump. So how did this happen so quickly? And what steps can you take to climb out of the hole? ABC's Elizabeth Schulze dives into the roots and remedies of this mounting crisis.
For the first time in history, Americans' credit card debt is above $1 trillion. Yes, that is trillion with a capital T. It's an enormous number that's been adding up for years. Just look at this chart. 10 years ago, household credit card balances totaled $660 billion. Today, they're near $1.1 trillion. So what's behind this trend of charging it on your card? Well, for one, more people are using credit cards, especially as we buy more stuff online instead of using cash. And this isn't necessarily a bad thing. A lot of credit cards offer perks, like giving you cash back when you buy groceries or gas, or extra airline miles for every dollar that you spend. Those are great benefits that mean more money in your pocket while also building up your credit score, as long as you're paying off your bill in full every month. But here's the problem. More and more people aren't paying off their bills every month, and their balances are getting bigger. During the pandemic, many Americans used stimulus payments from the government to help pay off their credit card debt. But as those stimulus funds have dried up, a recent survey from Bankrate found that 47% of credit card holders are now carrying debt from month to month. That's up from 39% at the end of 2021. And the number of Americans who are missing their payments is going up too. Credit card delinquencies are rising the fastest among lower income borrowers, millennials, and people who have other kinds of debt like auto or student loans. The average credit card balance now stands at just over $6,000, the highest in more than a decade. So why are balances going up so much? Well, one reason is inflation. As prices increased, households have had to pay more for the same stuff. To fight inflation, the Federal Reserve has raised interest rates, and those higher rates matter a lot if you're not paying off your balance every month. Minimum payments don't always do the trick. Let's say you have $5,000 in credit card debt, and your minimum payments are $35 a month. With interest rates at the current nearly 21%, it'll take you more than 16 years to pay off that debt. And you will have paid more than $7,000 in interest alone. That's on top of that original $5,000. Okay, so what can you do if you're feeling trapped by your credit card debt? The first thing you can do is try to call your credit card company to negotiate a lower interest rate. You can find their number on the back of your card. Another option is to sign up for a balance transfer credit card. That will allow you to move your existing debt to a new card, usually at a much lower or even 0% interest rate for a set amount of time. You do want to be careful not to open or close accounts too frequently, because that can harm your credit score. And finally, think about working with a reputable nonprofit credit counselor to make a plan to tackle your debt. Make sure you vet the agency first by checking the federal government's list of approved counselors.
Those are all great tips. Our many thanks to Elizabeth for that report.
Well, hey there, GMA fans. Robin Roberts here. Thanks for checking out our YouTube channel. Lots of great stuff here. So go on, click the subscribe button right over here to get more of awesome videos and content from GMA every day, anytime. We thank you for watching, and we'll see you in the morning on GMA.